Hello, I'm David Frazier, the President and Chief Market Strategist of Frazier Mayer Research, LLC, InvestorsMonitor.com, and of course the editor of our financial market publications, Frazier Strategic Allocator. I'm recording this week's video, our Market Insights show, on Wednesday, May the 17th. At around 11 o'clock.
It's a long day, but I already did one recording, and there were problems with our audio, so here I am re-recording it. But that's not your problem. So let's get right into this. We haven't, or I haven't, had much to discuss lately, and therefore did not record a video over the past few weeks. And, once again, I said this about 6 weeks ago, we're really supposed to do these videos every week. I just didn't have anything extra to say. It's not an excuse, it's a fact. It's a fact that I had not already written about in our monthly investment journal or our regular written weekly investment commentary. Now, if that bothers you and you want to see a video every week, regardless of whether I have anything extra to say, well, please let me know. Send us an email. In fact, you can email me directly at david@frazierandmayer.com. That's M-A-Y-E-R, David@Frazier as my name in our publications, david@frazierandmayer.com, or even give me a call. I don't know of anyone else that does what I do, that gives out their direct phone number. But here it is. If you have something to ask me about, don't call often, don't call all the time. I'm usually busy doing research and analysis. But I can be reached at 561-401-9207. If you do call, please make sure it's something that is important and that it doesn't require a lot of time, because I really do spend about 12 hours a day researching economic, political, and individual stock market, individual stock factors and developments. Having said that, okay, let's get into this. Now, I warned you approximately 2 weeks ago in our monthly investment journal that stocks were in danger of pulling back sharply, and I reiterated a few of those comments in our latest weekly investment commentary last weekend. And, as I told you in those publications, that the reason that I thought stocks were in danger of pulling back sharply is really directly tied to what's going on in the United States politically, and meaning President Trump's economic proposals appear to be going nowhere. It's really a shame. You got the Congress. I mean, you got people in the Senate that have been there 30 or 40 years. They're not interested in you. They're interested in having cushy country club jobs with lots of benefits, health care benefits, retirement benefits. They don't do anything. But, I'm not going to get off on a political rant, even though I could go on for an hour, at least, on a political rant. It's really a shame. I don't think they cared about doing anything except getting reelected, because there's been no action. The health care bill, new health care bill, just doesn't seem to be a very good one to begin with, and it appears to be going nowhere. Taxes appears to be going nowhere. Infrastructure investment appears to be going nowhere. And we have all these distractions on President Trump supposedly colluded with the Russians. President Trump improperly fired the FBI director. There might be some truth to that. I don't know, and you don't know, and I can tell you, these media people, they definitely don't know, and they don't care. They just want to sell a story, and they know that it sells a lot of stories, and it gets attention and attraction on broadcast TV and in newspapers. But right now, that's all it is. It's a distraction. We have no idea whether President Trump colluded with the Russians. And my thinking is logically, it doesn't make any sense why he would have, so I doubt very seriously that they did. We don't know why President Trump fired the FBI director. I do know that the FBI director really did not function properly in his position when he decided to take on the role of the Justice Department in deciding whether or not Hillary Clinton should be prosecuted. So, I mean, that alone's a reason to fire him. There's probably a lot of other reasons to fire him. I don't know. But we don't know any of this. Once again, but it's a distraction regardless. And what it's causing, these distractions, is both individuals and business executives are becoming less confident about a successful implementation of President Trump's economic proposals, such as reducing income tax rates, investing heavily in infrastructure projects. And we're seeing, as a result of that, a slowdown in the housing market. We're seeing a slowdown in the manufacturing sector. And these are very problematic. You know, the housing, what happens in the housing market and the manufacturing sector always has been, well, I shouldn't say always, I don't know, at least since the 1950s, has been very related to what happens in the stock market. So this is a problem, and I've warned you about this. You know, I warned you about it in our monthly investment journal, and I warned you again last week in our weekly investment commentary. And those of you that bother to go to my firm's internet website at www.investorsmonitor.com, I warned you again this morning, not this morning, yesterday morning around 10 o'clock a.m. when I said again that some economic developments were suggesting that stocks were in danger of pulling back sharply. But as I told you in our monthly investment journal, you know, I don't like to make big bets about what might happen. I like to manage risk, but I'm not going to tell you to get out of securities that are performing well or that look like they'll perform well during the near-term future unless we have some solid reasons as to why to get out of them. Well, today and I'm tired, of course, so bear with me here. I have put in about, what is this, going on, I don't know, 15 hours now that I've worked today at least. But we did have some reasons that were presented today when stocks did, in fact, pull back sharply. For example, I'm sure you're probably already aware of this, but the Dow Jones Industrial Average was down, let's see if I can find that. I think it was 373 points. Yeah, 373 points or 1.8% today. The S&P 500 index was down 1.8%. The NASDAQ Composite Index was down 2.6%. And the small cap Russell 2000 index was down 2.7% today. So a big sell-off today. And the reason being, with this time I think the media actually got it right. They rarely do. Is because what I had already stated 2 weeks ago, and again last week, and again on Tuesday morning, and that it looks like there's less and less likelihood that President Trump's economic proposals are going to be implemented anytime soon. And that's a problem. So, I don't want to go off on a tangent here. Let me try to focus here. As I told you a couple of weeks ago, if I saw any signs of a deterioration in my tactical asset and sector allocation model, or if I saw any of our holdings moved lower on a big increase in volume, that I was going to probably advise you to get out of those securities. And that's exactly what I did this evening in a trade alert that I wrote that some of you probably have not gotten yet, but you're at least supposed to get it on Thursday morning before the markets open for trading, where I'm advising you, our clients and subscribers, to sell numerous of my previously recommended securities. And the vast majority of those securities, as of the close today on Wednesday, May 17th, had generated gains. So it's not like they're going to be taking a lot of losses. A couple of them, there are some fairly substantial losses. But if you followed my recommendations closely, you should have a very small amount of your overall portfolio in those securities that will result in losses, and so that should have extremely little negative impact on your overall portfolio. Now, the ones that will be taking gains in, most of them are modest gains, but they're at least gains. Keep in mind what I wrote, what I write fairly often to try to remind you, and which I put in this trade alert. My major goal, and in regard to our clients and subscribers, is to help you to avoid the big downturns, to avoid the big downturns completely, keep almost all, if not all of what you have intact regarding, that is, preserving the value of your portfolio, and to profit from the major upturns. Now, we've profited little over the upturns that occurred since November of last year, and that's primarily because the day after Trump was elected, stocks gapped up sharply and have been trading, what my research indicates, a lot of the securities at inflated prices. And even though, for example, I wanted to advise you to allocate some of your money to bank stocks and numerous technology stocks, the bank stocks in general have traded at inflated prices, in my opinion, based on my research, since Trump was elected, as have many small cap growth stocks and technology stocks. But today, now that stocks have, in general, sold off pretty sharply today, including bank stocks and technology stocks, I think this is probably going to present a very, very, very good opportunity for us, meaning that my research and experience suggests that stocks in general will continue to move a bit lower on Thursday morning after rebounding modestly during maybe the first hour of trading, and then to move a bit lower also on Friday, but then to likely consolidate next week and then to trade in a narrow sideways pattern for several weeks, if not for a couple of months. If stocks instead continue to trend lower, well, if you follow my recommendations, you should have a large allocation to cash in your portfolios, and therefore you're not going to participate in any big losses if stocks in general continue to move lower if you're heavily allocated to cash. And at the same time, if you follow my recommendations and you're heavily allocated to cash, once we see some signs that the economy starts to improve again, a lot of what I think is this political nonsense, but at least distractions, go away. It might be a week, it might be 2 weeks, it might be 3 months. But we'll just sit and wait and be patient, and then we'll have an opportunity to buy a lot of stocks that I wanted to recommend to you previously at much more favorable prices. I don't think I'm going to say much more than that. I just really hope that you follow my advice, and I've been very, very good at forecasting major turning points in the U.S. stock market for about 17 years now, getting people out very near the highs and getting them back in very near the lows. And I'm confident that I'll be able to continue to do that. I tend to vie on the side of caution, and sometimes I miss some big winners that I had been monitoring. But I always like to focus on capital preservation. I mean, the time always comes when one can buy securities at very good values where risk is low, and then they can just sit and watch those stocks and ETFs and E10Ns move higher for several months, if not for several years. And that's what I like to do. Having said that, let me wrap this up by saying I encourage you to go to our internet website, my firm's internet website, investorsmonitor.com, on a daily basis. There's a lot of, we cover economic developments, both here in the U.S. and internationally, political developments, news on individual companies and stocks, earnings releases, and very importantly, every day of the week between around 9 o'clock and 9:15 every morning, I post a daily market forecast on what my research and experience indicates how stocks in general will perform on any given day of the week. And thus far, I've been right about 70% of the time. in those daily forecasts. I don't expect to get them right all the time. If I did, that means I'm Bernie Madoff Jr. No one gets it right all the time, at least on a daily basis. But I think you'll find some important insight there. So I encourage you to go there. And lastly, one more time, if you have any questions or comments or anything, it doesn't matter. Don't hesitate to contact us. So I thank you for listening and watching. And I hope this video recorded properly so I don't have to record it again. And I'll plan and hope to shoot another video within a week. Thanks once again.